Good evening all. I welcome all the participants to Heritage Foods Qtr1 earnings call, and especially thank you all to join on a holiday and during this restrictions period. I now take you through the standalone results of Heritage Foods Qtr1. Our turnover is 620 crores, down by 13% compared to previous year same quarter, 711 crores. You're all aware there is a significant fall in the demand post-lockdown, which has resulted in lower turnover. We have achieved 53 crores EBITDA compared to 50 crores of Q1 last year, a 5% growth. Core business profit before tax is 36 crores compared to 33.27 crores for last year Q1. PAT for core business is 27 crores versus 21.7 crores during the Qtr1 last year. Now I compare Qtr1 performance with Qtr4 on standalone basis. Turnover same 620 crores versus 643 crores of Qtr4. There is a fall of 4%. EBITDA 53 crores versus 26 crores of Qtr4. Core business PBT is 36 crores versus 9.72 crores of Qtr4. PAT is 27 crores versus 6.79 crores of Qtr4. Moving on to consolidated results for Qtr1, the turnover is 639 crores versus 721 crores, there is 11% degrowth. EBITDA 57 crores versus 48 crores of last year's Qtr1. Core business profit before tax is 36 versus 33.27. PAT for core business 29.23 versus 18.85 crores Q1 last year. Again, consolidated level, I compare now Q1 performance with Qtr4 of FY20. Net turnover 639 crores versus 653 crores. There is a 2% degrowth. EBITDA 57 crores versus 28 crores of Q4. Profit before tax, core business 36 crores versus 9.72 crores of Q4. And PAT, core business 29.23 crores versus 7.20 crores. Now I highlight certain features of dairy business on its own. Qtr1, there is a small increase of profit before tax around 10%, 32.4 crores to 36 crores compared to last year. This is essentially attributed to better realization through sale prices of milk and value-added products. Volumetric data, milk procurement volume during the current Q1, 14.5 lakh liters compared to 15 lakh liters of Q1 last year. Milk sale volumes, 9.19 lakh liters during the current quarter compared to 11.6 lakh liters of last year's Qtr1. Curd 253 tons per day versus 462 tons of last year's Qtr1. The contribution of value-added products to the total revenue has come down to 25% compared to 33% of last year's Qtr1. Again, essentially, the fall in the sale of value-added products, which are essentially impulse products and consumed outside the home, there is an impact on the VAP sale. During the current year's Qtr1, our expenditure under Capex is lower at 8 crores compared to 107 crores of the full financial year during FY20. So it's a lower expense because most of the projects got started, no construction happened. Though projects at very final stages of completion, but most of the works could not be completed and projects were not commissioned. No capitalization happened, though we have incurred certain expenses on the final stages of the projects. So now the works is revived in this month. Slowly we will recoup the speed and complete the projects which are ongoing. The debt position, if I explain, this is at HFL level, Heritage Foods level. Long-term debt is 185 crores and short-term is 38 crores as on June 2020. We have a 100% wholly owned subsidiary. Long-term loan is 14 crores and short-term working capital is 4 crores. These are broadly the details of the Q1 performance. Situation continues to be same. In spite of unlockdown, demand is yet to pick up outside the home demand. We are looking forward to rebuild our sale volumes in the coming months as situation improves. Thank you very much for the patient hearing. I now open it for discussion, suggestions, feedback, clarifications from any of the participants. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Percy Panchaki from IIFL. Please go ahead.
Hi, sir. Good afternoon. I basically wanted to understand the liquid milk sales, which is down 7%. So I just wanted to understand the out-of-home component of your liquid milk portfolio, because my understanding is that the in-home liquid milk sale demand has actually gone up, and despite that, if we have a 7-8% kind of decline, is it because our out-of-home portfolio was large and there was a significant decline in that?
Yeah, mainly the liquid milk growth out of home reduced because of the reverse migration of the people. In most of the cities where we operate, like Bangalore, Chennai, Hyderabad, a lot of employees have vacated the city and left home because of the lockdowns. And the consumption has fallen because they would have consumed at home only, but they are not here anymore. A lot of them have migrated. 1. 2, the office-based consumption, daily 4 to 5 cups of coffee, tea consumption also has fallen for every working person in the office. So offices and the factories and wherever shops. So this consumption has to come back once the activities move forward and people also come back to urban areas again.
So, sir, it was a demand problem, right? There was no supply issue that you could not supply the extent of demand.
Absolutely. It's only demand issue. Demand has fallen post-lockdown and even after unlockdown has not come back. Mainly because of migration of people and change of work habits, working place, etc. And the shops are not open. The consumption, outside home consumption is yet to come back.
Okay, so even in July, we have not seen a normalization of that.
July, we have not seen it.
July, of course, June, July had another set of issues of monsoons and severe restrictions in Bangalore and Chennai. Though it was unlocked down at national level, these two cities have been facing the lockdown restrictions more than April, May.
Right.
Also impact.
Understood. Secondly, on margins, you had very handsome margins this quarter, I think because the milk procurement prices were very low because again, the milk demand being low affected the prices. But now as the demand comes back, I'm sure the milk prices will also go up and therefore your margins may not sustain at these levels. So would you give us some flavor on both how you see the milk procurement prices trending for the next few months and also at a EBITDA level, what is the kind of comfort you have on margin delivery?
Of course, the situation is quite unclear as of now. It is a very uncertain, unpredictable kind of scenario we are going through. 2-3 aspects. One, when the economic activity revives, when the workforce will come back to urban areas, where our demand depends on the return of the people to urban markets because our sales are mostly in urban areas. Very small quantities are in the Tier 2, Tier 3. So the return of people, return of normalcy in economic activities is one. It is connected to that. And the second is the monsoon. Right now, monsoon is quite active and good this year in the first June, July. Rainfall is normally higher in most of the parts of the country. So the expectation is milk production. Like last year, lactation cycle got delayed, which normally should have come in October. It came in January. So this year we are expecting lactation cycle to be normal. So we are only left with 2 months, August and September, before the lactation cycle begins and flush season begins. So if flush season starts in a normal mode, the milk availability will be higher. And the third aspect is inventory. Entire financial year last year, from July to March, we were crying for non-availability of milk, scarcity, high price of procurement milk, high price of SMB, non-availability of SMB. Most of the industries have asked Government of India to import duty-free or with reduced duties and distribute powder in the country. That situation suddenly changed after lockdown. The milk availability improved and inventory increased. Most of us have some fall in the demand, so that the balanced milk be converted into milk powder and butter. Every company, every cooperative is holding these stocks. So in view of the increased inventory of commodities and onset of flush season in 2 months away, we don't expect a significant change in the procurement prices unless demand overshoots, which is not looking so as of now. So we have to watch every month, every quarter and see how the margin structure will change, how prices will move, how the demand will come back. It's a kind of premature for me to comment on situation. Maybe we have to wait and see and navigate the business carefully through this crisis period.
Right. And the other thing which happened this quarter, apart from input cost deflation, your margins were also helped by control on your overhead costs. So can you give us some idea on what part of these costs which have been controlled is sustainable and what part is sort of only temporary or exceptional because of the lockdown and those costs will come back again very quickly?
And price, when the sale has come down, the price
Of course, it is a little bit
variable cost. Most of the costs are down because volumes are less, the number of vehicles deployed
or
reduced. So the higher charges have come down because we have all outsourced vehicles. Of course, there is significant fall in the travel. Almost no travels. Everything is run through Zoom calls and audio calls. So travels and stay allowances, all that movement costs. Every employee gets a travel allowance, movement allowance, stay allowance. Entire workforce is, not able to move. So these are the things which will come back. With the volume increase,
travel, power and outward freight.
These are all reduced because of the volume issue.
Understood. So, but generally you sort of give some idea, and typically we have not guided more than 7% EBITDA margins, but this quarter we have done 9 in spite of such adverse circumstances. So can we basically consider that this 7% benchmark is broken, and for the rest of the 9 months we will at least deliver more than that 7% benchmark?
Yeah, that is what I tried to attempt, that this is very unpredictable, uncertain situation. It is unfair and premature to commit anything at this stage. We have to run the show.
Understood. And my last question is, given that procurement price is down so much and there is some amount of farmer distress, do you see any kind of government intervention in terms of subsidies, etc.? And if so, is that something that can be negative for a company like you?
Yeah, governments are, being approached by farmers associations, industry associations for export incentives. Like last time they have given 1.5 years ago, 50 rupees a kg kind of subsidy for evacuating the stocks from country and reducing this glut scenario, which might happen. That would help in liquidating and disposing the accumulated inventories, and it may have some impact on the procurement prices also.
Okay, but you are expecting more of a subsidy on SMP and other products rather than a subsidy on liquid milk?
Yeah, definitely, because they have never given subsidy on liquid milk except Maharashtra for a limited period. That too for the milk that is used for converting as powder.
But sir, Telangana and Karnataka is giving subsidy to milk poured into cooperatives, right?
That is going on for years.
Okay, but you don't expect that quantum could increase, or maybe some other states could follow suit or something like that?
All their money is going to corona management now.
Right, sir. Right, that's all from me. Thanks and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. If time permits, you can come back in the question queue for a follow-up question. The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, good afternoon and congratulations for the good set of numbers.
Good afternoon, thank you.
Sir, my first question is on inventory. Is it possible to know what is the inventory as on 30th June?
Can you repeat? I'm not able to hear. Your voice is a bit blurry.
Sir, can you hear me now?
Yeah, better.
I was referring to what is the inventory outstanding as on 30th June on the balance sheet?
Inventory
140 crores.
Oh, so it was about 145 crores in March 20, so there is no increase in inventory. Is that correct?
No, it's 1 minute.
values have come down. Quantities have increased.
140 crores as on 30th June, sir, on standalone basis. As on 31st March, it is 136 crores.
So there is no change as such in inventory, right?
There is a change individually. If you see, actually, then butter we have disposed of, but similarly, so these are two changes. As on 31st March, butter we used to have actually 1,049 tons.
Mm-hmm.
And now the butter has come down to 381 tons. We have disposed of in this quarter.
See, typically we store butter during the quarter 4 for consumption during the quarter 1. That's the normal year, where the quarter 1 we find milk scarcity and we use the butter for the business and also for ghee. So that butter could not be consumed this year because of the change in circumstances, and we felt it is better to dispose of, and we sold off the butter. That is how the butter inventory has come down.
Similarly, SMP on 31st March we used to have actually 1,868 tons. Now it has gone up to 3,822 tons.
Oh, so it has, okay, it has almost doubled.
Inventory values have changed. See, SMP price in March was very high. Now it is low. So even the quantitative increase is there. You won't see that in the value because of
okay.
per kg price has come down.
Okay. So essentially, in the earlier question, you were referring to that given that the SMP prices have fallen, there could be a probability that the government might give an export subsidy or something like that, right?
Yes. Yes.
And given this significant decline in milk procurement, is there any chance of any price cuts being done, or as of now there is no chance because the last 1.5 to 2 years there was a big decline in profitability?
As of now, there is no proposal for that.
And my last question is on the subsidy. Sorry to repeat it, but there are some news flows which suggest that Andhra Pradesh government is thinking of increasing the milk subsidy. Any truth in these rumors, or nothing much to sort of worry on that part?
I've been hearing since last 1 year, more than 1 year, and maybe we'll hear for some more time.
Yeah. Okay, sir. Okay, sir. Thank you. I'll come back in this.
Thank you. The next question is from the line of Prashant Koti from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity, sir. 3 questions, but firstly, one clarification. So the milk procurement prices in the month of July would have also been similar to what the June average would have been?
We'll discuss July next month.
Okay. Sure. Another clarification was with regard to the liquid milk realization. So this would be the full price which is reflecting in the first quarter, right? I mean, usually when institutional all of them come up, you would be having some discounts, or when the modern trade is fully active, you have some discounts. So will this liquid realization typically kind of come up as the demand keeps increasing?
Realizations will be same even in the other channels when they come back.
Okay. So this is pretty much the number as far as liquid milk realization is. Okay. So the second question is basically on the, you said that the demand was impacted because you spoke about that the offices were missing and the out-of-home was missing. What could be the out-of-home demand, sir, as far as our overall dairy business is concerned, and specifically for liquid milk? And similarly, what would be the retail proportion?
What is that?
No, I'm saying what is the out-of-home consumption in milk as well as the value-added product?
Yeah, it is definitely different for different companies and different cities.
Yeah, how much would it be on a consolidated basis for us?
Milk could be around 15 to 20% for us.
Okay.
Which is going towards the office level consumption or the canteens and restaurants kind of consumption. And value-added products, it could be 30%. And there is something impulse that happens, all over the places where people move, railway stations, bus stations, and shopping areas. They are not institutional, but they are impulse purchases like lassi, buttermilk, flavored milk, milkshake, ice cream, frozen dessert. These are all the items which are consumed, particularly in the summer season, and we had the summer gone by without those demands.
Okay.
But it is different for different companies.
Okay. Got it. And sir, the third and the last question is basically if you look at our overall performance, if you look at our spread, they seem to be pretty sharply high in this particular quarter. While you're saying that the milk procurement might not change given that it's flush season coming up, and also that the liquid prices might remain the same. So suffice to say, sir, even if the demand is how it was in the first quarter, ideally the spreads should largely sustain. Is that a right assumption to make?
Yeah, I tried to clarify earlier that this is a bit uncertain, unpredictable scenario. So we have to watch out every month, every quarter. We'll keep updating you. Though situation looks, same.
Okay. And just one last bit, sir. On a month-on-month basis, have your consumption been improving by any chance? Like, was June better than May, or was July trending better than June? Is there any such direction?
It is not impacted by the monsoon. The value-added products also, consumption also fluctuates with the monsoon activity, the continuous rainfall in these markets. It is not coming up. So once the rain subsides, then demand will come back. Secondly, this is a normal festive season. Festival celebrations and the marriage celebrations both are not happening the way it used to happen. So the expected demand because of weddings and festivals is also not coming, which used to offset the monsoon impact. Now monsoon impact is there and the celebrations are not there. So we are not seeing that spike, which should have come normally.
But monsoon would have been there last year. So on a YOY basis, sir, it should not be...
Monsoon impact would have been set off by the celebrations.
Okay.
Celebrations also are not there. Now it's a double disadvantage scenario.
Okay. Sure. Thank you so much and all the very best.
Thank you, Krishna.
Thank you. The next question is from the line of Vivek Ganguly from Nine Rivers Capital. Please go ahead.
Thank you. One quick question. Hello, can you hear me?
Yes, sir, you're audible.
Yes, please. We are able to hear you, Mr. Ganguly.
Hello, can you hear me now?
Yes, please.
Yeah. One very quick question. For the price that you all paid per liter of acquisition of milk, what was the average for the whole last year and what was it for this quarter?
Milk procurement price?
Yes.
Milk procurement price, last year it was 33 rupees 40 paisa.
Right.
This year it is 35 rupees.
30. The whole last year was 33 and now it is?
Last year.
For the first quarter?
Last quarter one.
Yeah.
Last year quarter one, 33.4. This year quarter one, 35. There is an increase of 1 rupee 60 paisa. That is quarter one to quarter one. But quarter four, there is a drop.
Okay. So if on the demand side, you all are not getting enough traction there, where, and the price can fluctuate, but from the acquisition perspective, while so you all are not able to pass that on. It's not that seamless in process. Is that what we should understand?
No, unable to comprehend what you said.
So what I mean to say is that on the demand side, you all are facing some pressure, but on the procurement side, you said that it is actually for this particular quarter, it is actually up by about 1.5 rupees over a similar quarter last year.
Yes.
So that means that on the supply side, you all did not get any benefit of a lower, demand and lower acquisition.
Compared to quarter one of last year, there is no advantage. But compared to the rest of the quarters of the year, there is a drop in the prices. The last financial year, I explained in the beginning, we went through scarcity of milk. Milk prices went up every month in the last year from July to March. And milk powder prices moved from 230 rupees a kg to 330 rupees a kg in 7 months' time. So that peak price scenario aggravated by scarcity continued up to lockdown date. And post-lockdown, there is a significant change in the milk availability, milk powder availability, and prices were lower. But Q1 to Q1, you don't see much advantage.
Right. And for the whole year, FY20, what was the average procurement price?
FY20. Just a minute, please. 35.55 full year.
Okay. Thank you, sir.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Shiv Kumar from Unifi Capital. Please go ahead.
Good afternoon, Shiv Kumar. Shiv Kumar?
Am I audible, sir?
Yes, now
Yeah.
you're audible.
Thank you, sir. Sir, congrats for a good set of numbers. So can you revisit the procurement price for Q1? I didn't get that number. You said 35, right? You said
35.55.
That is for full year.
Full year.
that's for the full year. What will be for Q1 FY21, the latest quarter?
35 rupees.
35.
35. And the selling price, sir, for the latest quarter?
46 rupees 39 paisa.
Right. Sir, this is an increase from the 44 rupees 26 paisa that we got to see in Q4. So our price hikes done across geographies, sir?
No price hike. It was done in the end of the month. Let's say price hikes were done in March and February also.
Right.
So the full value of the quarter has come in this quarter, not in the previous quarter.
Okay, got it.
Any price increase that was taken in the month of March would not be reflected in the quarter 4 fully.
I see. Right. So now you got to see the full benefit, right?
Correct.
Right. So, and on the milk volumes which were sold, 9.19, you got to this number in spite of April being a full lockdown month. Will you be able to hold on to this volume in the subsequent quarters? Yes. What is your own sense? Okay, you should be able to. Okay, great. Sir, and one last question on the margins. You said you had disposed of butter inventory during the quarter, and typically the butter inventory's margins are a little low than the other products. So should we say that the margin would have been better if not for that disposal of butter?
Margins of butter are not better.
So margins for the... Yeah. Go ahead, sir.
Yeah, because this significant part of this butter was made during the quarter 4 when the milk prices were high. And this, in normal course of business in any year, we would have consumed in summer during the lean season when milk availability was low. We would have used it for various requirements. Because of the change in circumstances, that butter which was carrying at a higher cost got sold in this quarter when the prices were low. So the margins were certainly not better, it is lower only. But
okay,
we had taken a sale decision because this summer is going to be having surplus milk than required, and there will be surplus availability of milk powder and butter in this year. Prices were expected to go southwards. So having taken that conscious call, we quickly liquidated because butter has to be stored at -18 degrees temperature, cold stores. The carrying costs were high. Instead, we preferred to hold the milk powder, which is in the dry form and stored in ambient temperature. So we significantly decreased our butter stocks and increased our milk powder stocks. That was a move we made in the lockdown period.
Exactly, sir. Fair enough, sir. So basically, I'm trying to say that if not for that, your margins would have been higher than what you reported. Is that a correct assumption?
Yes. Yes.
Right, sir. Great, sir. Thanks a lot, sir. That's it from my side.
Thank you. The next question is from the line of Rupen Masalia from RN Associates. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity and congrats on a good set of numbers. Sir, I have a couple of questions. One is, just want to know the breakup of revenue geography-wise and competitive intensity. That is number one for Q1 FY21 as well as FY20 full year. That is first question. And second is, due to ongoing COVID pandemic, is there any delay in our yogurt launch program through joint venture company? That's it.
The first question, we stopped sharing the territory-wise sales data because it is getting into the hands of our competitors, and there are certain business disadvantages we were facing. So it's not for transparency reasons, but it is for the business competition reasons we stopped sharing that in public domain. But in case you wish to, if it is beneficial for you for taking any decision, we can give you offline for anyone with an understanding that you will use it for our benefit.
Yeah, that's perfect, sir. That's perfect, sir.
Rupesh, I know you are our well-wisher, and you will use it for our benefit. I'll share with you later.
Yeah, no issues, sir. And
I request Brahmani to respond to you.
Yeah, with respect to the second question on an update on the JV project, which is Heritage Novendi Foods Private Limited. The project is progressing smoothly at this point in time, although in between, given the fact that the plant is coming up in Maharashtra, which was the initial epicenter of COVID, there were some delays. And in addition to that, we had rains, so that also delayed the project. However, now the project is moving in full swing. Our teams are more or less ready. Most of the hires are done. Our marketing plan is underway right now. And given the fact that the plant side, everything is moving smoothly, we expect to be launching the product end of October, beginning of November.
Okay. That's great, ma'am. And on the competitive intensity in AP, Telangana and other geographies, if you can, throw some light.
Competitors.
Intensity in AP, Telangana and other geographies.
It is intense everywhere. There is nowhere market is open exclusively for us. It's intense everywhere, and everybody is trying to grow, and everybody is getting investments also. There are no issues about it.
So while we can't speak too much about competitors, I think we can speak about our own operations during this COVID time. So one of the good things was that all our operations, especially logistics, were normal during this time, both on the procurement side as well as on the distribution side. All our processing facilities were operational during these tough times. We were able to work with our farmers, support our farmers, and did not reject any milk from them, and protect their livelihoods. In fact, we went about doing a lot of empowerment and input activities also, including subsidized cattle feed, providing them with loans, in fact, record high loans to our farmers, all of that. Our R&D activities are in full swing. In fact, we've launched new products in the market during the last 4 months, including A2 milk, which is good for immunity, better for digestion, and good when it comes to its functional benefits. We also launched milkshakes during this time, hoping to get the benefit of the summer season. And we have a basket of more products we will be launching in the coming couple of weeks. And we were also able to actually effectively use technology during this time, given our integrated ERP system. We were able to transact smoothly. Digital payments were very smooth during this time. We were able to use IoT to be able to monitor our operations, including GPS in vehicle tracking system. We have applications for indents, and that's how we were not able to miss out on any market-related opportunities that we had. In fact, we've also been thinking about our go-to-market strategy, and we've significantly focused on newer channels which have picked up during COVID, such as e-commerce. We have doubled our throughput through e-commerce. We have improved our sales through MRF, where we were underserving through certain chains. And most importantly, I guess our employee safety became very paramount, and at every level, we ensured that our employees were safe, and everyone's been thoroughly covered under insurance programs, etc. So on our side, I think our logistics were very efficient. We were able to launch new products. We were able to use technology and be available through innovative channels.
Yeah, that's really helpful. That's it from my side, and all the very best for future.
Thank you.
Thank you so much.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Sir, now that some of the cost is probably structurally going to reduce, even if the lockdown is over or COVID impact reduces, still probably people travel so much, or there will be reduction in general the other costs also. Probably some media spends also may also reduce. So do you see some structural savings coming considering this disruption? Point number 2, what is the Capex that you are looking at? Because probably this year there may not be, rather there will be volume decline most likely. So is there any need to go aggressively for Capex, or do you see some savings on that front also?
On the first one, in terms of costs, there is no significant change in the cost structure, except that our volumes of the sales volumes have come down. Thereby, the logistics costs have come down an absolute value. When 2 lakh liters of milk is less, to that extent my transport costs will come down because we are all outsourced vehicles and we reduced our number of vehicles, etc. And the power consumption also comes down because quantity packed is lesser. So these are related to variable costs that have come down. So I don't see a big difference in the cost structure. Travel. Some of the costs may come back, like travel costs, etc. Instead of cost structure, we are looking at efficiency and regaining the volumes so that we can come back to pre-lockdown levels. On the second question of Capex, yes, you're right. We have enough capacities to meet the requirements. We don't have to create new facilities at the moment, but we have initiated certain projects earlier. They are all in different stages of completion. They require funding. So far, we have incurred 8 crores in this Q1, but going forward, we have to spend those monies and complete the projects which will be commissioned towards the end of the financial year for the next summer requirements. But relatively speaking, it will be lower than previous 2 financial years spending by 20-30% at least.
Okay, so can we roughly assume Capex to be around 80 odd crores in 85 crores in FY21?
Yes.
Okay. So last question, what was the average milk procurement price you said in Q1? I missed that number.
Q1.
Q1 35 rupees.
Sorry, 35.
35, yeah, 35.
35 rupees average milk procurement price in Q1.
Yes.
Okay, sure, sir. Yeah, thank you.
Thank you, Anirudh.
Yeah, thank you.
Thank you. The next question is from the line of Sagrika Mukherjee from Elara Capital. Please go ahead.
Yeah, thanks for taking my question. Sir, just wanted to know what was your curd sales in value terms, and that first.
Yeah, 253 tons per day.
In value terms, sir?
Value terms, it will be 140 years. We'll get the actual. 125 crores.
Okay. And sir, fat and S&P sales during the quarter, if you could give me?
S&P doesn't say.
S&P we haven't sold. We have accumulated inventory. Fat we have sold.
59.8.
Fat positive.
That's 59.88.
59.88.
60 roughly.
Okay. And sir, any chances procurement milk prices in July are lower than the 35 rupees that you procured at in the first quarter?
Can you repeat, Sagrika?
Sir, your milk procurement prices in July, are they lower compared to first quarter average price of 35 rupees?
Maybe it's fair, we'll discuss it in the next call.
Okay, fine. But sir, in this glut situation, when production is expected to be high and also demand is low, chances are it can be trending downwards unless the subsidy etc. comes up, right?
We are also entering a bit of lean season in buffalo milk area. Typically, July, August are the lean season months for buffalo milk areas. Production comes down, so there won't be such a change in the production or sale. It's almost stabilized now. Last 2 months, whatever surplus is there, it is being converted into milk powder and reserved for the future use. So it's not that there is a change in this month or next month either way. It may be stable for the time being, particularly because we are entering the low production season for buffaloes.
Yeah. And sir, could you please share your selling price for curd for the quarter?
54.46. 54.46 per kg.
That is our realization.
Realization. Sales price.
Yeah. Okay. And so in terms of milk prices, in terms of MRP, etc., for liquid milk and curd, are there any pressures in terms of anybody like the market leader wanting to take price cuts now and passing it on? Any such talk?
Not as of now.
Not as of now. Okay. All right, sir. Thanks a lot.
Thank you, Sagari.
Thanks.
Thank you. We'll move on to the next question. That is on the line of Shraddha Seth from Edelweiss. Please go ahead.
Good evening, sir. Hope all of you are doing well. So most of my questions are answered. Just one question. Wanted to understand, our Capex requirement annually, and what is the kind of capacities we have currently to cater to the kind of, volume growth that we are seeing, because this year clearly seems a washout year. Even if we reduce our Capex by 20 to 30%, if you could just explain the breakdown of the Capex. I think you had explained 2 quarters back in terms of, the chilling center costs and all. But if you could just break down annually, what is the kind of Capex requirement in the current scenario we need?
We currently have installed capacities of 20.28 lakh liters of chilling. They are distributed in milk procurement areas. And we have 23.7 lakh liters of the processing capacity, which are in the factories where the milk comes for separation, pasteurization, etc. Then we have 15.35 lakh liters of milk packing capacity. And we also have 6 lakh kgs of curd packing capacities. These are the major installed capacities. These are enough for meeting the current business requirements. But what we do is, every year we add certain facilities for meeting the next year's production requirements. There is another aspect. In certain markets where our capacity is available, but sale is not there to the full capacity level. But in certain markets, our capacities are limited and the sales are growing. There is a kind of mismatch in terms of installed capacity versus current sales growth. That happens in the planning. You expect certain things to grow, but it doesn't grow there, it grows somewhere else. So though we have overall 15 lakh liters of milk packing capacity, we still add 1 lakh liters in a market where our growth is faster than capacity, or we aspire to grow in that area. That is how sale volumes and the packing capacities do not match. Procurement capacities in the low seasons like summer months, our procurement go down in buffalo areas by 60%, 50%. So I may have 1 lakh liter capacity, but I will be getting only 50,000 liters in summer. In the same locations, in winter months I'll get 90,000 liters. So the capacity utilization of chilling, I have 20 lakh liters, though we handle only 15 lakh liters today. It looks like I have 5 lakh liters idle capacity. In winter months, I will be going closer to capacities. In summer months, I will be going lower. And in certain markets, I have almost reached my chilling capacities in winter months. In certain procurement areas, not. Therefore, it will not be very clearly, straightforward business requirement versus installed capacities. There is always some gap. That is about the need for further investments. And the next, when we invest typically 100 crores in a year, about 15 crores go for non-project issues like infrastructure development for IT, either servers or licenses for SAP or new developments, etc. Similarly, some amount goes for front-end infrastructure like milk freezers, chillers, ice cream freezers, then the crates to be deployed in the market, etc. So there is a front-end investment in the market and the IT back-end investments. They also are part of this 100 crore investment we make. And then core dairy investments are there. 4 types of investments are in the core dairy. One, village-level milk collection centers. When villagers come to give milk, we have to put an analyzer in the village. We have to give weighing scale, cans, etc. That will cost approximately 1 lakh rupees per village. And chilling centers are bulk coolers to bring the milk to a place and chill them. That is again an investment of 15 crores, 20 crores going to the chilling capacity creation. Then we have a packing stations for processing and packing milk and milk products. Another 30-40 crores will go into that, new capacities. There is every year renewal of the outdated machinery, old machinery, etc. There is a replacement cost of 10 to 15 crores in the replacement. Then there are certain energy conservation programs we take up and the replacement of the inefficient motors and conducting lines. So that will take another 5-6 crores of energy management. Then there are safety requirements where certain boilers or chimneys or condensers, compressors, these are all prone for certain hazards. So safety activities we do. It's not that absolutely go for only capacity creation in the plants and chilling centers. You have to create village level infrastructure, chilling center level infrastructure, packing station, and the existing packing stations, upgrading them or replacing certain equipment. Then the front-end market investments and the back-end IT investments. All this put together is the annual capital budget. That is a typical 100 crore model we have taken in the past few years. This year, we definitely do not require immediate capacities because our volumes are down. But we have committed certain projects. Already buildings are constructed and equipments have arrived. So those projects have to be completed. For that purpose, we will be utilizing certain Capex in the current year. And as usual, our IT back-end market infrastructure, they are funded. So this year, maybe 75-80 crore kind of Capex will invest as a preparations for the next year. Current year business, plant capacities are available. There is no problem at all. Hope I have answered, Shraddha, your question because you have been raising this couple of times earlier and Anand also told me you are seeking more details. I thought I'll give you full view of what is Capex for us. And in addition to this, whenever we want to create a new project for next year, we have to acquire some land, keep them as a land ready for the next year or following year's plant expansions or new locations. The land acquisition cost also comes into picture in this Capex.
Sir, this was very helpful. So this entire Capex that you spoke about, this leads to additional capacity of about 1 to 2 lakh litre per year. Is it a fair assumption?
So not only additional capacity, this is also for back-end IT infrastructure, front-end market infrastructure. In the market, we require to give freezers and chillers in the selling point. And we have to supply the milk and products to crates. Plastic crates, they get damaged every 2 years. In a life of 1.5 years, 2 years only. Crate for transit movement of these materials. The market infrastructure is there, back-end infrastructure is there, then the land acquisitions are there, then the village level milk procurement. I may have a chilling center, but I have not provided the village level electronic milk analyzer. So we have to keep on adding that in the village level. There is an annual exercise. Every year we put Even we put 1,000 villages in analyzers, it will cost 10 crores. That's the kind of Capex requirements spread over village to packing station to market and the backend.
Fair enough, sir. That was very detailed and very helpful. Thank you very much, and all the very best.
Thank you very much.
Thank you. The next question is from the line of Rajesh Ranganathan from Doric Capital Corporation. Please go ahead.
Good evening, Rajesh.
Hi, thanks a lot for the opportunity. Couple of questions. So you had mentioned in your presentation that your strategy now is going to focus on expanding to rural areas and tier 2, tier 3 towns. And Ramani, you also mentioned earlier that you're doing a lot on the new channels such as e-commerce and so forth. Could you help us understand a little more detail on what exactly are you doing and what are your targets in terms of where you are and where you want to be with respect to rural and tier 2, tier 3 locations, and what do you need to do differently for that? And for e-commerce, how do you benchmark your own performance versus say what the competition may be doing, and what new opportunities does this open up for you in terms of products? You mentioned that you're improving your product slate. Could you please talk about that as well?
Would you like to respond?
Yeah, sure. So basically, just one small correction here. Tier 2, tier 3 cities is not something that we are currently looking at in selling our products, because we believe in urban markets where we are present already, there is a big opportunity, especially when it comes to value-added products. Today, if you look at majority of our value-added product sales, it comes from curd, right? There are other products also where we'd like to penetrate our channel much better, which is, beverages and ice creams and the new introductions in terms of slightly more functional value-added products, which contextually we feel come at the right time because of, COVID, immunity, etc. And so that's our focus when it comes to markets. We will stick with our existing markets and opportunistically look at those markets which are in and around our existing markets, which work out well in terms of logistics and which are developing. A city like Hyderabad, for instance, has been growing in terms of size, and certain rural parts of the district are becoming more and more a part of the city itself. So in such cases, we will be looking at expanding our market size within our existing regions. So that's where we are. And of course, when it comes to the vision of the company, by 2024, we want to double our contribution of value-added products towards our revenues to about 45 to 50%. And that will come from both existing products, for itself is a huge opportunity, and from these new products that we're talking about. So that's where we are. Of course, when it comes to e-commerce, that's another huge opportunity, and dairy products become a very important part of the basket even for consumers, and that's where we're looking at penetrating and increasing our volumes through the major channels. Simultaneously, we're looking at a direct-to-consumer go-to-market strategy too. Like I mentioned before, we've just introduced our own app in Hyderabad as a pilot. It's called Heritage Touch, through which we're already servicing close to 600 consumers, and the backend being the same. So it's very cost efficient for us that our existing channel partners or agents distribute these products to the consumer directly, whereas the orders are taken through the Heritage platform. We're also just starting to introduce value-added products and not just milk and curd through that particular platform. So yes, there is higher focus on technology-driven channels and through modern retail format stores, especially for value-added products going forward.
But when you mentioned in the presentation that you want to focus on rural areas and tier 2, tier 3 locations, what does that mean exactly then? Like I said, what it exactly means is in and around our existing markets, we will look at logistically improving our efficiencies by looking at those areas which were underserved in the past and can be opportunities for us. We are absolutely not looking at going into newer states, newer parts of the existing states where we service. Okay. And From a point of view of, I think, Mr. Rao, you already answered regarding the subsidy risk hasn't yet rectified in Andhra Pradesh for the past 1 year. But a few days ago, Andhra CM signed a MOU with Amul. Is that important?
No, we have our own farmer base, we have our own consumer base. Amul has come to Telangana also with a similar model, and they will go everywhere. They have been going to Orissa, they have been going to West Bengal, they are going to Bihar. So Amul will be there everywhere in the country. So we will continue to do our business and they will do their business. I don't see any issues for us.
Okay. But ultimately, as you correctly pointed out, we have to come back to volume growth. I mean, margins are fantastic. We love it, but it has to be a combination of both. And from your decision to launch new products, new channels, all of that is obviously helpful. But is there anything else in terms of M&A that has opened up because of the current environment?
M&A. We are actually trying to breathe. Breathing trouble.
Okay. All right. And on the future retail shares, any thought process on how you want to execute that share?
Anyway, that's in the public domain last few weeks. Some transactions are being discussed about the company. So we are also eagerly waiting to see the outcome. As far as Heritage is concerned, the lock-in period is over. Heritage has now the right to take its own decision on these shares. But we will watch and respond to the situation as it improves.
Thank you so much. Wish you best of luck.
Thank you.
Thank you. The next question is from the line of Prashant Kutty from Sundaram Mutual Fund. Please go ahead.
Thank you for the follow-up, sir. Just a couple of things from my end. One is with regard to the on the cost side, sir. Anything that we can do on the employee front, which we probably can do, because we've actually seen a sequential jump in our employee costs. And also, if we try to compare it with any other, let's say another player in the south, it seems to be higher. So anything in this period which we can try to reduce the employee cost, I think?
No, we haven't cut any jobs. We haven't cut any pay. Rather, we paid incentives for those who have come to work during the trying times, particularly the casual workers, contract workers, security people, drivers. And we have to provide them food because there was no food available. Imagine a truck moving from one place to other place. En route, our dhabas were closed, our restaurant, hotel, nothing was there. We have to pack food for every one of them in our canteens. Luckily, most of our factories have food canteens where they make food. They were provided for drivers, loaders, cleaners, workers. So food costs have gone up. In addition to that, the sanitization, disinfecting, we have purchased even 70,000 face masks so that everybody carries a mask, and gloves, hand gloves, tons of sanitizers, and additional incentive. We paid 20 to 25% extra for the workforce in the initial period when people are reluctant to come out post-lockdown. Then we have to give them additional support of transport because no transport was available. Buses were stopped, autos were stopped. We have to hire some vehicles and transport them to their homes and pick them up. So the significant costs were incurred for the worker safety and motivation purpose. So as long as this continues, our cost on employees side will not be reduced. So we will have to continue and sustain the workforce attention. 100% people are working for us, and not a single employee has any distress. They were all safeguarded by our actions. So I don't see employee side we should cut any corners and save money. And they are very important elements for sustaining the business in these difficult times.
Okay. Sure. Certainly. And sir, just one more point, if I actually missed that out. You just spoke about the institutional milk, like you said, was about 15-20%, which is out of home, and value-added products about...
Institutional is different.
Sorry, not institutional. You said the out of home. Sorry. My apologies. Yeah, out of home is about 15-20%, and you said for milk. And for value-added products, it's about 30%. What was the decline in the quarter for this particular 15% and this value-added product of 30%?
More or less same.
I'm sorry, I didn't get it.
Those numbers. I said they're different for different companies. These are the numbers for our company. And they are also different in different markets. It's not same in every market. So some markets are 10%, some markets are 20%. It varies. Like dense urban area like Hyderabad city, 1 lakh employees have stopped coming to office and they started working from home. All these 1 lakh employees in various IT companies would have consumed at least 5 lakh cups of beverages, tea or coffee. That's the fall. And that milk would have gone from us.
Sure. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Dr. Samba Sivarao for his closing comments.
Thank you very much for your sustained interest in heritage foods. We are very glad to share these details with you, and we had also an opportunity to highlight to our investors and potential investors the activities we have taken to safeguard our employees and safely deliver our products to our consumers without any disruption. And we take this as a responsibility today, not just as a job or a business. It's a nutrition in times of necessity and income to the farmers when all sources of income dried up. The milk was the only source of income for sustaining their families, and we were able to procure all the milk, and we were able to pay on time punctually without any delay through our digital payment systems. So we were very glad in the difficult times in the country. We as a sector and as a company supported farmers for their income and consumers for their nutrition, safeguarded our own team of employees, and presented some reasonable numbers for investors. And thank you for associating with us. I'm looking forward to interact with you again during October month. Thank you and wish you all a safe stay and take all precautions. Thanks again.